There's no way to increase the price of that cash if it's just cash in a pile. So the question before us is, would any inflation in the global economy have an adverse impact on the trading card market? And it's my opinion that the answer is a firm no. Hey, what's going on, folks? Welcome back to the Parkside Merchant channel. For today's video, I wanted to speak a little bit about the topic of inflation. This has become a very, very hot topic in the past several weeks. Now, I'm not talking about inflation of card values. I'm talking about the large-scale economic notion of inflation in the United States and in other global economies that may or may not have implications on different asset classes like the trading card market. Before we dive in, I should say off the top that I am not a financial advisor. Do not take this video as personal financial advice for your personal financial decisions. This video is for informational and for entertainment purposes only, coming from a trading card game enthusiast, a talking head on YouTube. With that out of the way, let's get to the meat and potatoes here of this discussion, which is, over the past several quarters, several major global economies, the US included, have been investing, right, and injecting a lot of money into the economy to just sort of stimulate economic activity. A lot of us here in the US have gotten these stimulus checks over the past couple of quarters. There's been other major spending initiatives, lots of lending and resources made available to small businesses and so on and so forth to try and just keep people afloat, stimulate economic activity, and put very bluntly and very simply, it basically amounts to just throwing money into the economy, right, in the short term to just kind of give it a jolt, keep consumer confidence high, and just keep spending happening. There is always an understanding, I think, among a lot of savvy folks in the investment community and in the economics community that there's going to be some kind of visible inflationary impacts that happen at some point, right? Maybe it's not going to be dramatic. You're not going to need to take a wheelbarrow to go to the supermarket with cash to go buy your groceries, right? We're not suggesting, I don't think anyone's suggesting that it's going to be quite that dramatic or quite that crazy. But there is certainly some understanding and I think some expectation that there will be some kind of a visible inflationary impact that happens in the global economy at some point in the next several years. So the question before us is, would any inflation in the global economy have an adverse impact on the trading card market? And it's my opinion that the answer is a firm no. Why would inflation not have some kind of a detrimental impact on the trading card market, you may ask? So to answer this question, it's actually quite simple. Typically, in an inflationary environment, folks will tell you that one of the worst things you can do is just be sitting on tons of cash, because that cash isn't appreciating in value. That cash is literally eroding in value to inflation. Every dollar is becoming less and less powerful in the marketplace. This is why people always talk about the wheelbarrows of cash to the supermarket to pay for your groceries, because each one of those dollars is becoming less and less powerful in the economy, just getting injected into the economy. The value of each one of those dollars becomes less and less powerful when they become more and more plentiful and readily available. And then you have a lot of companies jacking their prices in response, right? What can happen in these kinds of environments is asset classes that can very easily respond to that inflationary pressure by increasing in price tend to be deemed more inflation safe or inflation hedged or buoyant or inflation resistant. You pick your term of art for stuff that can rise with the tide, so to speak. But this is why people talk a lot about real estate as a nice asset to have during inflation, because it's very easy to increase things like rent during inflation. It's very easy for property values to continue appreciating during an inflationary environment because people have lots of dollars and it's easy to just keep jacking the prices of the housing assets. This is why sometimes stocks are not, you get sort of mixed feedback, I guess, in a lot of people's opinions around like, other types of securities where their value is often dependent more on the performance of the company and that company's ability to respond to those inflationary pressures than it is around just people having more plentiful dollars available to spend. This is why I like trading cards a lot in an inflationary environment, because a lot of the value that's put on these cards is just based on how many dollars people have and how many dollars people are willing to spend on those cards. So in other words, with a trading card, unlike a stock or some other security, the only criteria that really dictates someone's willingness to pay for that trading card is their ability to pay for it and sort of other arbitrary feelings that people have about that card in terms of its sentimental value, its rarity and scarcity and all this other stuff. When people do stock analysis, they don't care how you could have infinitely many dollars to spend on a stock, but it doesn't mean you're going to spend all those dollars on that stock. So I think the point that I'm driving at is trading cards have a very nice ability to continue rising in price arbitrarily in response to or at pace with the inflationary pressure. And insofar as people have more and more dollars to spend, it's very easy for the trading card market to just keep going up with the tide, so to speak. And if there's anything that we've learned, I feel like, over the past several years, it's that if people have more dollars to spend, if there's more power of the purse, so to speak, in the hands of collectors, they're more likely to spend bigger dollars and stroke bigger checks on the big ticket cards. I don't want this to come across as I'm one of those people that subscribes to the non-stop growth, this moonward trajectory, right, of the trading card market. I'm not necessarily fully subscribed to that philosophy or that worldview that these collectibles just keep appreciating in value. But as I've discussed in other videos that I've done, if your cards are sufficiently rare and if they're sufficiently desirable in the trading card market, and if inflation is happening, it is very probable that that card's value is just going to keep going up as people have more and more dollars to spend, and the value of the dollar might be declining, but the price, like the sticker price of those cards, can keep going up in response to inflation. I'm not really worried at all about my position in trading cards or some of the other collectibles that I have, because I know that those assets are very easily going to be able to respond in price to any of the implications that we see from inflation in the market over the next couple of years or couple of quarters. I can't say the same if I'm sitting on a stack of cash, right? That cash doesn't appreciate. Like, there's no way to increase the price of that cash if it's just cash in a pile, right? If the cash is vested into a card, then the card's price at least can arbitrarily increase. I can increase the price on eBay. People may be willing to pay more for it, right? I feel more comfortable that my trading cards that I own, especially the PSA, encapsulated, PSA 10, PSA 9, first edition, all the fundamentals, right? The stuff that's like obviously interesting from the investment perspective. I have no doubt that those assets are going to respond well and perform favorably in an inflationary environment compared to just a pile of cash whose value is just going to incrementally get whittled away or get eroded by the power of inflation in the open market. So that's a whole bunch of just stream of consciousness about this topic, but hopefully this is clarifying for folks about my opinion about why trading cards as an asset category are going to be more favorably responsive to any inflation that happens in the market compared to things like cash or other types of assets and even securities where you just don't know how that stuff is going to perform or how people are going to value it or whether its value is going to keep pace with the rate of inflation. So that's all I have to say here. Go ahead and pick it apart, folks. I am ready for the feedback in the comments. I know people are going to object to this, disagree with it. They're going to have a lot of negative feedback on maybe some of these opinions, but it's just my opinion that trading cards as an asset category are actually not a terrible move in an economy that might be subject to certain inflationary pressures. So that's all for the video, folks. Leave a comment down below. Let me know what you think. Once again, this is the Parkside Merchants channel. Thanks again for watching, and we'll see you next time.